Hi everyone, this is Mike Kramer of Mock Capital. Today is Tuesday, August 20th, and it's around 5:45 New York time. This week we're going to have things really starting to pick up as we get through tomorrow. Tomorrow sort of kicks things off starting around 10 o'clock when we're going to get the preliminary annual payroll benchmark revisions. This will be important because it will tell us whether or not the job numbers that we had seen in previous month had been too high or too low, and this number is expected to show that the numbers were overestimated. So it could be as much as 1 million from what I've read. Then, of course, at 2 o'clock, we're going to get FOMC minutes. Then, of course, on Thursday, we're going to get initial jobless claims at 8:30 in the morning. These have become a market-moving event. So you'll want to pay attention to these data points and specifically whether or not they're higher than lower than the estimates and whether or not there were any revisions last week. Then on Friday, we're going to get Governor Ueda of the BOJ presenting in front of Parliament. And then, of course, also on Friday later, we're going to have Jay Powell speaking at Jackson Hole. So there's going to be a bunch of different market-moving events taking place between now and Friday, with really the big day coming, I think, on Friday. But again, one shouldn't underestimate the importance of initial jobless claims. Given that, we're going to start off today again with the Japanese yen because this still seems to be in focus. The Japanese yen had been weakening following some comments out of the deputy governor of the BOJ back here on August 6th. We had kind of seen some weakening in the yen, but since then the yen has really started to strengthen again, and it's come back to basically where it was when he made some comments about not hiking rates during periods of market volatility. It seems at this point a lot of that has been worn off, and obviously what Governor Ueda has to say this week will have much more weight. And so we're going to be watching to see whether or not we can get below this 144 3/4 level. Because if we do, it likely means we're going to set up to see a retest of the lows around 142 from August 5th. And really this 142 level becomes very important because below the 142 level, you don't really have anything again until about 139 or so. And really you could start making an argument that's closer to 137 to 138. Also, another factor here is that you've been seeing U.S. 10-year yields coming down. They're also at an important point around 380. The 380 level has been an important level just because you've seen it act as support on a couple of occasions. We briefly got below it on the 5th, but then we quickly came back and moved back up to 4%. Since then, we moved back down. Again, basically what's happening here is the Japanese yen just appears to be trading with the 10-year rate. So if you start seeing the 10-year rate moving down below this 380 level, good chance you're probably going to start seeing the Japanese yen strengthening towards 140 or so versus the dollar. We've also been seeing a lot of weakness in the dollar across other currencies as well. We've been talking more recently about the strengthening of the euro, and that continues again this week. We had come to a point where it wasn't really clear whether or not the euro, which way it was going to go. Clearly at this point, the euro has decided to break out, and it has been moving higher. We did clear important resistance at this 110 area, and it looks like at this point we're now getting to another big level of resistance right here around the 111.5 region. A break of the 111.5 region, I think, sets up a retest of this 112.60 region, which we saw back here in July of 2023. This certainly seems like a possibility at this point, given how much the euro has run and given how much 10-year rates here in the U.S. have fallen. Additionally, when we look at some other indicators here, the Bollinger Bands show us that we're sort of at an overbought level. So this region right here around this 111.30 area might serve as a region where we see some consolidation in the euro before we make another attempt at move higher, because we're also, as you can see, trading above 70 on the RSI. When we look at the British pound, that's also moved up to overbought conditions with an above the upper Bollinger Band, but you can see here that the RSI is still below 70. So this suggests that there may be some more momentum to the upside still possible. The 130 level, obviously a big level of resistance. It looks like at this point we're trying to break through that level, and that really does suggest that we could probably have some more room to run to around 131 or so in the near future. When we look over at copper prices have moved higher now over the last couple of days. They've come off of this the bounce. You can see we're approaching the upper Bollinger Band, But again, copper was really oversold, so I don't really know that the oversold conditions, the overbought conditions in copper are really all that important at this point, just because the RSI appears to like it has broken out and it is beginning to trend higher. This is an area where we could probably see some resistance, but I think it's more likely that we're going to see it up around this 430 level and not in this 414 area, just because we're seeing the dollar weakening. And typically when the dollar weakens and rates come down, you expect commodity prices to move higher, and certainly the break in the momentum would suggest that. Even when you look at copper prices on the trend line here, you can see we're right here right now trying to break through this downtrend as well, and momentum has turned positive. So again, I still think there's potential here for copper to go a little bit higher, at least over the interim. Gold prices continue to show signs of breaking out to the upside, at least at this point. Again, gold is up here hitting the upper Bollinger Band, but again, we're not really all that overbought. RSI still below 70, so it does suggest there could be further room to go. Also, again, one would think that with dollar weakening, with interest rates coming down, one would expect gold to continue to rally. And overall, this looks like a breakout from a period of consolidation. If this indeed is that consolidation is over, we could be talking about a move in gold potentially up to the $2,800 mark in the not too distant future, if indeed this was just a consolidation pattern and we continue to get follow through. But again, the follow through is needed. And obviously, if the dollar continues to weaken, that will be a tailwind for gold prices going higher. And certainly the dollar is weakening against almost every major currency these days. So there is certainly the possibility for that to happen. When we look at the DAX has really refilled and retraced all of the losses that it saw at the beginning of August, although I'll note that it did get back up to this upper end, and at least as of today, it did pull back. So what we're going to be looking for when we zoom in and look at our 15-minute chart, DAX got up to this resistance area right in here, which basically allowed it to fill this technical gap from back here on August 1st. As of right now, that's your resistance level. If this resistance continues to hold, I think you can look for the DAX to potentially retrace to somewhere in the 17,950 area. If we're able to break out, then we're going to see it probably go up and test 18,650. When we look at the DAX, at least on a daily chart, really not overbought, not really overbought on any condition. So it certainly could go higher from that perspective. But again, I think you just want to watch your resistance levels now and see whether or not they can hold. The FTSE also has regained all of its losses after giving us a breakdown. You can see the FTSE has moved right back up also to where it was. Certainly not in an overbought position by any means. Also, when we look at it on a 15-minute chart, you can basically see that the FTSE has returned just barely below the 8,400 level. The 8,400 level has really been a big sticking point for the FTSE now, going back really since the middle of July. So again, we're going to want to see if it can get above 8,400. If it does, then we're retesting probably the highs at around 8,470. But what's interesting here, I guess, is if you want to try to break this down, is you can see that there's a little bit of support right in this area around 8,275. A break of this level probably opens the door to a retest of the lows around 8,120. The NASDAQ 100 has also seen a very big rally. Notice as well that the NASDAQ has basically come back and filled the gap that was opened also basically here around July 23rd, 24th. So again, at this point, NASDAQ has really just filled a technical gap, hasn't really done much more than that. Certainly the NASDAQ on the RSI and on the Bollinger Band basis, certainly not overbought. And so again, I mean, with the gap now filled, it becomes basically this area of resistance. If we can gap above the resistance level tomorrow on the open, I think it will open a path to around 20,375 and potentially fill another gap from back at the middle of July. But again, there's a bunch of open gaps to the downside, and this level may prove to be a little bit trickier, especially if we start seeing the Japanese yen, for example, start to trade lower, because we know that U.S. markets have been highly correlated to this. At least for now, you've seen that they've separated, But again, we haven't really changed or gone outside of the previous range. I would suspect that if the yen starts getting closer to the bottom of the range, you're going to start seeing that weigh on the NASDAQ and really across markets globally. So that's something that you might want to keep an eye on. And it's a similar sort of setup for the S&P. Also got up to this resistance zone in here. S&P has also deviated USD JPY. So we're going to want to watch this for a potential breakdown. Also, there is a gap up here that needs to be filled. I would think that the longer you stay in this area without filling this gap, the more likely it is that the next move is going to be back down to start filling some of these gaps and potentially start trading again with the direction of the USD JPY if that is heading lower. Otherwise, I mean, I think it's fairly simple here that your next area of resistance comes at the old highs around 5,700 or so. The Dow also is not really in overbought positions yet, so certainly from that standpoint, it can still go higher. Again, when we start looking at these intraday charts, we can see that this area in here has certainly been an area of resistance. There is no real sign of it being a resistance area, so this appears to be something new that may have developed. We can certainly see there was a little bit of consolidation in this region here, so this appears to be acting as support. Otherwise, the next meaningful levels of resistance come around 41,160 and then again around 41,365. I would think, though, that if we were to gap lower tomorrow on the Dow, it would open a pathway to potentially filling this gap here around 4,057 and potentially some of these other gaps as well. The Dow hasn't really traded quite as much with the Japanese yen, and perhaps that's just because there's less of these technology stocks in the Dow. Obviously, Microsoft and Apple are in it, Salesforce and now Amazon. But again, the big ones have been the semiconductor stocks, and the Dow just doesn't really have that, at least the ones that are going up. I think Intel, even though it's a semi, it's really not performed, obviously. So that's really where we are. I hope you found this helpful and have a great rest of your week. Until next time, bye.